Hi, this is Gigi of theboringtrader.com. This is a video on week 7 of the 15 minutes breakout system. Goes from 11th to 15th of May. There is a blog on the website. I'm just talking a bit about that blog. What a week. It was a really good week for the system. It was actually the best since we have started this blog. This was the weekly equity curve, and this was also would have resumed the nice ascending trend of the cumulative equity curve. It took a bit of a dent last week. Last week wasn't brilliant, but actually it recovered plus something. Now that's good news. The not so good news is that it wasn't really a great week for me as a trader. My performance was nowhere near this one. This is one of the many reasons why I keep bothering everyone about the warnings and disclaimers that I put everywhere when I show any performance number. There are many reasons for my lack of performance and my departure from this kind of performance for this week. First of all, I was very wary of the reduced volatility of past weeks. I was extra cautious. I reduced risk in the morning and actually did not trade this system at all from 9 to 12 in the morning. And this was based on statistics, of course. But if you see what happens on this chart, this is a time of the day performance. You can see that the best performance was by far reached between 11 and 12 o'clock. Compare these charts with the cumulative chart from the beginning of the 7 weeks. As you can see, there's no much scope in trading between 9 and 10. There was little scope to trade between 10 and 11, and again there was no much scope to trade between 11 and 12. Now this number includes this week, so you can imagine before this was much lower actually and was negative. This week we had this kind of anomalous behavior of the movements in the time of the day. This is a good opportunity to reiterate one of the warnings, actually. Remember, again, what are we measuring here? We are studying statistics of weekly performance, and we just have 7 weeks. 7 weeks are simply not enough. Judging by these measurements only, we still need to assume that the results are just about random. So from a certain point of view, we shouldn't use this data. So the good question is, well, why did I use this data to filter trades? Well, there are many reasons for that and many answers. First of all, I have a much longer experience than 7 weeks, and in my experience, the time after London Open and before New York starting, it's traditionally quite slow and the volatility reduces. So whatever I've seen so far made perfect sense to me. The other thing, as I said many times, I have a combination of systems and I trade different systems at the same time, not necessarily following all the rules. But again, the rules that were created by me and I suppose I kind of know what I'm doing. I hope so. Um, I had other things that require my attention, personal and business like. And well, perhaps I'm not really disciplined enough. But this week in particular, I had a number of scheduled and unfortunately unscheduled interruptions, distractions, frustrations. My mind was not really focused, and I made a couple of mistakes. So I had to close the position in the middle of nowhere because I needed to go somewhere. And so, really, the important message here is that what you're seeing here and here is the best possible execution based on the rules. It's a bit like the house or the car or the dog or the partner, whatever that you have in mind. You have this ideal kind of idea, but uh, then when you're looking for some in the real world, you have to compromise on this or that aspect. So this would be in an ideal world where you actually are in a position to follow all the rules and have all the slight discretionary part done perfectly. One last thing before we look at a couple of examples. Remember, this is a scalping system. With scalping systems, when things go well, they go really well. With a very high hit ratio like we had last week, the impact on fees has been the lowest since we started this blog. Now you have to remember that the other side of the coin, however, is that when things do not go so well, you have to add the cost of fees to your losses, and these really, really hurt. So this is one of the occupational hazard of us trading scalping systems. Now I want to show a couple of trades that were available according to the rules last week. This is euro against yen. This line here, this vertical line here, is the London Open, and see what happens here. You have a clear support at this level, and you have a signal here. You have enough space to see if the market checks this level here, which is the big round number. As you can see here, the big round number has been quite important, at least in the past. This is your fixed stop based on the volatility of the previous weeks on this particular pair. So you would have entered about here, and you would have entered at 8:15. You would have reached half hour and 1 hour. This was a very neat and is a classic, fantastic breakout signal that we would really love to see. Then the market checks the big round number and it bounces up. If you look at this level here, this level is based on this high. There is really a better place to enter this, in my opinion, and it's this level here, the higher high here. It was tested a couple of times. It was used quite heavily as support, now could be resistance. It was used as resistance in the past. So this level is quite important, and entering at this level here, where the signal is telling you, is not particularly clever. It might work, but a safer place to enter is this one. So let's see what happens. Let's assume that we want to enter at this level here. So we would have entered at this level here on this rally. We would already be a little bit worried about this. Well, this is a little bit better, and the market goes up. We're about 1 o'clock. If there are some news at 1 o'clock, we might want to close out the position and break even anyway. But see how the market really doesn't have a breakout. This is not a breakout. If you entered here, you would have had a much better chance, because this is a better breakout. At the moment, if you're staying here, you're really a little bit worried about what might happen, and in this case you would be really worried about losing the position. Now you have another signal here, and it's exactly the same situation. You don't want to use that, and at this level here, this is 2 o'clock, something big happened, you would have been stopped out. So nothing wrong with that. If you're a novice and you just want to follow the rules are saying that you should probably enter here, and this is your stop, and this is your trade. And even so, the system seems to be working quite well. But if you want to enhance the probabilities of the performance of your system, these little nuances that come with experience really, really help. Now, what happened next? Is that you start having another signal here. How does this signal look like? Well, let's have a look. If you entered here, about here, you would enter quite close to the big round number. However, again, you might want to test it, because there is a chance that it will retest this level here, the big round number, and perhaps now you would like to use a 0.5 to 1 risk, because the probability that it checks this point is quite high. The probability that has another breakout below this is not that high. But anyway, this is what happens. It tests and penetrates this level here, so you would be in. Mind you, will be quite late. This is the last chance, because we close shop at this level here. So at this level, you could have closed the position at break even if you liked. But as you can see, the market retests this level here, so you could have got another half hour quite easily on this trade. In this particular case, you would have been particularly lucky, because then the market continued and you would have had a 1 hour. But according to the rule, at that time I'm quite exhausted actually, so I would have got out here with the whole position, and risking 0.5 to 1 is perfectly okay. Just want to show you some other examples on the next day, because what we just discussed, okay, this is the London Open for the next day, and we have this level here. Right? Now, your first point of call, if you want to enter this one, is this high here. If you enter at this level here, there is enough space for the market to test this level, and if it goes back, you just move your stop at break even, perhaps on a manual kind of thing. There are a number of things here that you might want to consider. This is obviously a pretty clear downtrend, so you would be against the trend. If you're using a trend filter, obviously you wouldn't take this trade, or you would take this trade with a lower risk. I mean, you have a number of combination possible here. So now here you entered this trade, let's say. Remember, you want to check about this area here and see what happens. The markets have this wick here. This is a clear rejection of this level. I would be very wary when I see things like this, and this is where really price action and the ability to read the markets bar by bar is very important. And again, it's a very slow process. It takes a long time to learn, but it really keeps you out of danger. This, to me, is quite a rejection of this level here. I would have put the stop at break even, and in fact the market went the other way. And here you have basically the same situation in reverse. Let me show you this. Because here you could enter here and you have the lower low here. So there is probably just enough space to check if the market wants to test this level here. But you have to be very, very alert and see if you have another kind of situation like this, you want to get out of break even. And you see the markets didn't even test this one, and there was another rejection. So when you see this, it's a low volatility, not a lot happening. My suggestion is get out, because you are trading a breakout system. If the breakout turns out not to be a breakout, you have no business staying in the position. This is at least what I think. As you can see, the market went the other way. Now you have the same situation as before, only that this is a little bit lower than this, and nothing happens. In this level of volatility, I usually look at this as a range, and I will try to trade the breakouts outside the range, irrespective from where these signals are. So this area is the range. I don't really want to trade inside, and see how it could have kept you out of trouble. Probably here, definitely here. You could wait until there is a clear breakout of this range now. Another thing we really have to be aware of, and this is my last example for this video, is news. There were some news here at 3 o'clock, and we are approaching news. When news are of some importance are in, I don't trade. I just close everything out and wait until I see what happens. And we are approaching 3 o'clock, and you see how also in the approach of this big news, the market really is not moving at all, is not doing anything. So this is the pre-positioning of the news. You would have been caught here, and many times when news are there, the market moves in a way that it just traps the opposite of whatever they want to do usually. So they trap all the bears here, and then look, bang, it goes the other way. So this would have been another loss saved. And if I wanted to enter at this stage, I would have entered here with a little buffer on this one. It's past 3 o'clock. The market digested the news. There is a clear breakout of this range. So this is a much higher probability trade. And I would have got my half hour. And this is where I stop. And yeah, I probably would have got the other half here. This is classic rejection. But you see how we would have saved quite a lot of trouble here, and this was the highest probability trade of this range, really. I hope it helps. Any question, obviously, you know where to find me. Bye.